This is Scott Becker with the Becker Business, the Becker Private Equity Podcast. We try to bring you 1 to 2 market and business episodes a day, and then typically an interview with a brilliant business leader. This is your Saturday episode today. Today's discussion is Apple, the good, the bad, and the ugly. So here's the deal with Apple, and we'll get to the ugly in a second. We'll get to the bad in a second. We'll start with the good. The good is that Apple is still a massive cash flow machine with a huge product base, and people ultimately love the Apple products. So that's really the good, that it remains one of the largest companies in the world with a 3.7 trillion or so market cap, and continues to be one of the most well-recognized consumer brands in the world. That's the good, massive cash flow. The bad is as follows. We're at a spot where Apple's growth doesn't by any means justify its price-earnings ratio. It's trading as a price-earnings ratio of about 33%. It's in a spot where the growth in both its iPhone sales and its services business aren't anywhere near the double digits that you need to generate a 33 times price to earnings. But Apple still trades at a great premium because of its massive cash flow and its great consumer product and its great consumer moat. Now, taking it a step third, to look at the ugly. The ugly is as follows. Apple itself is down about 9% year to date, and that compares to the S&P, the NASDAQ, which is down 1 to 2%. Even over the last 15 months or so, or the last 6 months, Apple's up about 15%. But again, that's not nearly as good as the S&P and the NASDAQ. When we look at Apple year over year, over the last 52 weeks, it's up about 11%. At a time when the NASDAQ, the S&P were up 17 to 20%. Similarly, it's being outpaced by NVIDIA, Google, and several others. So that's a story with Apple. Great cash flow, great installed product base, terrific. The bad price-earnings ratio that well outstrips its growth currently. And then the ugly, down 9% year to date, up just 11% over the last year, when the NASDAQ and S&P are up about 20% plus. In any event, thank you for listening to the Becker Business, the Becker Private Equity Podcast. Thank you very, very much.